Hello, and thank you for listening. My name is Luke Mardigian, and you are listening to Be Insured, where we talk about business, leadership, and insurance. That way, on your worst day, when you need it the most, you will be insured. Before we get into today's topic, I want to tell you an amazing resource we created just for our listeners called the Ultimate Commercial Insurance Roadmap. This guide breaks down the 4 major things every business owner must look out for in order to save money and ensure their company is properly protected. You can get your hands on this guide right now by heading to beinsuredonline.com. That's beinsuredonline.com. All right, listeners, in life, anything can happen. As you continue to cross more milestones like buying a house, getting married, saving for retirement, having kids, the risk is greater and greater. Personal liability is how you protect yourself from those risks. And this episode will explain what personal liability insurance is and how much coverage you really need, and share some real and somewhat bizarre cases where personal liability saves some folks from losing everything. And I'm excited to be joined by my awesome co-host,
Eric Gestring, the Mardigian Agency.
And our fantastic guest expert,
Roger Graff, Farm Bureau Insurance, VP of Claims.
Awesome. Luke, let's get it started with you explaining to our listeners what personal liability is and why it matters and it's important.
So personal liability is a coverage on your homeowners. It is not elective, meaning that you have to have it. It's mandatory. The state of Michigan says you got to have it. You can change your limits, and every company's limits are just a little bit different, but typically it's anywhere from 100,000 to 500,000, sometimes $1 million. And why does it matter? Why is this important? Because there's a million things that you could be sued for personally, and it costs a lot of money to defend those things. And so at the very least, even if you're not wrong and you just do something that gets you in legal hot trouble, it may be covered by your personal liability on your homeowners or an umbrella, depending on how your policies are set up and what company you're with. So it's kind of interesting. Roger, what type of liability claims do you see roll through your department?
Well, from a personal standpoint, Luke, what is most common, believe it or not, with a homeowner's claim, take a guess at what you think that would be. Most common claim.
I would say
dog bite.
Yeah.
So
trampoline.
Wow, you're looking at my notes here. It's a dog bite. It's totally a dog bite.
Yeah,
so a third of all our claims, and actually it's a national standard. A third of all claims on homeowners are dog bites.
Wow.
And the interesting thing in Michigan about dog bites is we have the dog owner statute. So what that means is that there's only 2 defenses. If you out there, if you own a dog, there's only 2 ways that if your dog bites someone where you're not responsible, and one is if that person provokes your dog, pulls a tail, whatever, and the other one is if the person trespasses. But other than that, if you're walking your dog on a leash down the street and if somebody comes by and your dog kind of nips at them, you're responsible for that. So a couple of unique, we had and these are unfortunate situations, but bizarre, you wouldn't think this would happen, but we recently had a scenario where our insured owned an Akita, small dog, 40, 50 pounds, very powerful dog. And the friend of the family came over, a 14-year-old female came over, and she'd been with the dog 100 times. And she just happened to be leaving, and she went and bent down to, give the dog a hug. And when she went to hug the dog for no apparent reason, because, dogs are animals, no apparent reason, the dog bit her in the face, which... very, very unfortunate, but more unfortunate in this scenario is that when the dog bit her in the face, this person had braces. So the dog's teeth hooked into the braces and ripped 4 of her top teeth right out.
No way.
Yeah.
Wow.
So you wouldn't, very unfortunate. The person, survived, plastic surgery, the whole shot, implants. Very, very unfortunate. But that person that owned the dog, they're responsible for that.
Yep.
That was their best friend, and they're still responsible for it.
We're always saying, it's usually your family members that are going to sue you, and people are like, no way. Well, this is a perfect example.
Yeah.
This is family. And
who's going to be around your dogs the most?
Yeah.
It's going to be family and close friends, right?
And that's the thing about a dog, that's, and that's where, and like I said, a third of all our claims are dog bites, and they can be, small and, insignificant and not breaking the skin, or they can be severe as that.
Yeah, and what's interesting is Akitas aren't really known to be overly aggressive dogs.
Not at all.
There's carriers, insurance carriers who are restricting breeds. They'll allow pit bulls and German shepherds, and
right.
On my end, in my police background, I dealt with our canines all the time, and they were typically German shepherds.
Okay.
Yep.
And they were the most disciplined, kind dogs that I've ever met. They're intelligent. it's not necessarily, it really isn't anything about the breed. It's the circumstances in the moment and what's going on in the animal's brain.
Well, and that's the reason why the statute is what it is. If you own the dog, you're on it. Other states, they don't have that statute.
Really?
Some states have a, I hate to say it, but it's like one bite free rule, where if your dog bites someone, then the next time they bite it, now you know that the dog has a vicious propensity.
But they would have to track that. And I mean, that seems like a lot of work. And I mean, they're going to have to pay somebody to keep records of all this stuff too. So
if it's reported, though, I mean, at least in Michigan, I mean, you have the animal control comes out and they document it very well. But that's just one type of claim. What I did is I just kind of sat back when I was invited to the show and, thinking about the typical homeowner claims. And, we had another one where you wouldn't think of this. I mean, when you think of protecting yourself, you're usually thinking, on your own property if somebody slips or falls, right? Well,
right.
We recently had one where our person is riding a bike in a park, and person came up to pass and left, and our person kind of, made a little mistake and went over. And as a result, they collided, and this person fractured both of their bones in their lower arm, had surgery, fractured their wrist. I mean, this is a big time injury. And the claim was made, that person that was injured made a claim against, our insured that was riding the bike.
And the homeowner's insurance covers it.
And the homeowner's picks up to where people don't think about that. They think, oh, it's just something about my house, but it's really personal liability. So it will go with you. We had I could tell stories all day, but we had a
Please do.
Right. We don't have enough time. We had a lady that was in a grocery store, and she jumps in those little, their manufacturers, Amigos, those little motorized carts. So she's in the cart, literally in the cart, in the checkout lane, and there's a lady in front of her, and she went to move forward, and she accidentally hit the gas too hard, and she hit the lady and ran over the lady and shattered her ankle.
No way.
Yeah.
I can totally see it with those things. Those are heavy pieces of equipment.
And they're sensitive.
Yes. Yeah. So there's just, for the listeners to say, really, I mean, I didn't realize things like that.
How important this is, yeah.
And they're purely accidental. There's nothing that's premeditated or thought out. It's just, when accidents happen from a liability standpoint, that's where you really, really, you're looking for your homeowners.
Yep, 100%.
Yeah, and that's, I always tell the story to my clients about my brother. My oldest brother is like 10 or 11. 4th of July, the family went to the beach to watch some fireworks. My brother takes a firecracker, throws it, and he's told me since, he's in his 40s now, but he said in his brain he thought it was going to bounce like I would on the concrete. You throw it and then it slides another 10 or 15 feet. Well, it stuck right in the sand next to some individual, some stranger, and went off. Well, he had permanent hearing damage in that ear as a result. So he sued my parents for the child's mistakes, because they're liable for you're liable for your kids. I always joke that my kids are probably going to be the reason why I get sued more than anything. They throw a rock and hit somebody.
But it's real.
But it's real. And they ended up settling for, the whole thing cost $100,000. This is in the 80s. So I mean, that's like $500,000 for a firecracker on the 4th of July.
Sure.
I mean, just in things that you would not think of that. At the time, my parents didn't have any money. We grew up pretty poor.
Sure.
So thank God we had homeowners insurance.
Hey, Luke, in the world of insurance, the golden question is always, how much coverage is enough? So how do you answer this for your clients when it comes to personal liability and making sure that they have enough coverage?
So that's a great question. There's two pieces that we look at. The first one is, if you're a younger professional, we look at income. So if your income levels, for us, our cutoff is $60,000. If you make more than $60,000, you need to have $500,000 personal liability and $1 million umbrella.
Yep.
Now, once you get to the 6 figures, for every 6 figures you make, you need to add a 1 to the first number, and that's what you want for an umbrella. So if you make $100,000, you want $2 million. If you make $200,000, you want $3 million. On and on and on.
Because those people, we always say, have targets on their backs, don't we?
I mean, people just assume because you're a dentist that you got $10 million sitting in the bank, but you may just be scraping by paying that practice off because you purchased it a few years ago.
Yeah, well, most business owners are floating the business and pouring back into the business all the time. So.
Exactly. So usually you're cash poor and asset heavy. So people don't realize that. And then the second one, so if you're not in your earning years and you've already accumulated, then it's what your net worth is. So we want at least equal, but typically we recommend greater than your net worth. So if you're worth $2 million, you got 100 acres up north, that's worth $3,000-4,000 an acre, and you got $500,000 or $600,000 sitting in a 401k or in the bank or in your home, then you're going to want more than $1 million. You want typically 2 million.
And people may say, well, why do I need it? I don't have that much in the bank. Well, you have to understand your assets are worth something, right? Yes.
And the court will find a way to get money out of you if you're liable.
And from a claims perspective, what we look at is, whatever our insureds, whatever limits they have, we obviously work with that. But what will happen is if a person is underinsured, what we do is, we do our best, because if we're gonna settle a case, we're always going to take a full release because we're going to protect our insured 100%, meaning that claim can never be resurrected. It can never be opened up again. But the difficulties lie in where a person, if they're underinsured, sometimes, the attorney that's representing the injured party, they won't accept the insurance limit. They want to go for more. So what that means is they want to try the case. They want the jury to determine what the value is, and then what happens is there can be an excess verdict, meaning something that goes over the insurance. And from the insurance carrier standpoint, if it was if the insured had $100,000 and the jury verdict comes out at $150,000, we don't pay $150,000. I mean, we still only pay $100,000. So then the insured becomes personally liable for that.
Yep.
And then what will happen in court is that there'll be a partial satisfaction judgment, meaning if we give the 100, well, there's still a $50,000 judgment out there, so the insured ends up with a judgment against them. So that's why it goes on and on about the importance of having proper limits.
The average American doesn't have $50,000 sitting in the bank.
No.
I think last time I checked, the average is like $3,000 or $4,000 is what the average American has in savings. So you're talking about literally destroying somebody's, a decade of their work, just because they decided to save.
Easy.
And this is what as an agent, this is what I find fascinating when people are underinsured. They're coming in, or maybe they're an inherited client from a book of business we have, and the difference between $100,000 and $500,000 is like $10 at the most, $10-15 a year price difference. So listeners, why wouldn't you just foot the extra $10 or $15? Just don't buy pizza 1 year of the year, and you've already made it up.
1 day of the year, yeah.
Yeah, 1 day of the year, and you've already made up for that cost. So Roger, can you, as we're getting ready for the end of the show here, can you give us some really bizarre homeowners claims?
I thought the dog bite was pretty bizarre.
That is pretty bizarre.
And,
the braces thing is...
and you can jump on with some of the gaps in coverage you've noticed. That'd be cool to get that in there too.
Well, just to and staying with personal, we're talking about homes, but even if we were to lean over to personal auto, just auto itself, what we see almost on a daily basis is, from our perspective, on an underinsured situation, to where our insured is injured, the other party has insufficient amounts. The insured comes back to us and says, "Hey, we want the underinsured. We have $500,000 in underinsurance, and that other party only had $100,000." So what we do is we look at it, and if that person is collectible, then we work together in order to get that money back from that person that's collectible. So people are. I talked to our subrogation department just before I came over here to say, "Hey, kind of what's going on lately in that?" And they say, "Well, I tell you, at the very least, when we have situations like that, we'll take the person's driver's license. Wow. We have the ability to do that. So if a person is, especially on the uninsured situations,
until they paid it back.
What's that?
Until they've paid back.
Yeah, but we have the ability, and that's very typical on an uninsured situation. And uninsured, what happens, crazy things about that is that party, now they're responsible for the physical damage to the car. They're responsible for the PIP. They're responsible for everything if you don't have insurance.
Wow. Yeah, that's right. Because that's one of the primary in the statute. It says you have to prove that you had insurance at the time of the loss.
Right.
Otherwise,
it mentions about the security,
yep.
and that's where she told me. Yeah, we take driver's licenses from people all the time, and the challenge is, though, they set up a payment fee so that people will pay us back, as a payment fee, but yet they can't drive now. I mean, so it's harder for them to work.
Yeah.
So it's kind of like I said, that's pretty interesting.
Yeah. I think the lesson from that is, just if you think that being underinsured is going to kind of get you out of trouble, get you out of hot water, because, I don't have any,
That's a good point.
Here's $100,000. That's just not the case. You're going to end up somewhere, somehow paying something, even if it's maybe just $1,000 deductible, you're still going to end up paying something.
So you need to sit down with your agent and have a review. If you haven't, make sure that those limits are up and where they need to be. If you don't have an agent that wants to do that, reach out to the Mardigian agency.
Yep. 3 things for our listeners. If you have a dog, a trampoline, or a pool, you absolutely, unequivocally need an umbrella insurance policy, liability policy. Call your agent today or call the Mardigian agency with Farm Bureau Insurance of Michigan, and let's take a look at how we can properly protect you. Roger, thank you so much for being a guest on the show. It's always a pleasure. We love the bizarre stories.
Thank you.
And as always, you can stay in touch with us by following the Mardigian Agency on Facebook and Instagram. That's Mardigian, Mardigian. Thanks, and we'll see you next time on Be Insured.